Imagine what's possible when learning doesn't get in the way of life. At Capella University, our game-changing FlexPath learning format lets you set your own deadlines so you can learn at a time and pace that works for you. It's an education you can tailor to your schedule. That means you don't have to put your life on hold to pursue your professional goals. Instead, enjoy learning your way and earn your degree without missing a beat. A different future is closer than you think with Capella University. Learn more at capella.edu.
Reality radio for a really great future. We're talking real money.
My gosh, there's just way too much going on today. Holy cow. I'm going to have to start with the phone number because I just got so many things on my mind now, and I'm going to forget to give you the phone number if I go off on my tangents that are popping up everywhere. The phone number is 855-935-TALK, 855-935-8255. I'm Don McDonald. And back in his cozy little room with his blankie and the load of lights getting ready to go in the tub is Tom Cook.
Yeah, and they say you can't leave your past. You can't escape your past, whatever it is.
You can't go home again. Well, you can, apparently.
Yeah.
He's
so
back in the laundry room again.
Just sad. And this week, if it wasn't enough to have the bleach,
your friend,
and the fabric softener, there's also dog biscuits.
Biscuits.
If I get hungry halfway through, I am set.
Everything he needs. Add to that the fact that I just heard the news. And, of course, now King Charles has joined us in podcasting. I'm sorry, but Kingy, we've been podcasting longer than you've been king. So just
way. Yeah. So sorry. Good luck. Welcome to the club, but the line forms to the rear. So,
and I don't mean to get political, Your Highness. But we're going to get political a little bit here at the beginning of the program. We're going to talk politics. But before we do, here's my other tangent I have to go on.
Oh.
I mentioned that we were talking about something political, and I said, all right, all you guys who give me hell about my politics, which aren't
as
liberal.
Always. Yeah.
I said, at the current time, I'm registered in R. And then I got trouble from the D's that I know. And the reality is, folks, let me just explain the reality of Don's politics to you very quickly. I registered as an R because of the state I live in. It's kind of like if you want to participate in the political process in the great state of Washington, you want to vote in primaries and have some sort of a say, you need to be a D. In Florida
you
now,
don't have to do that.
You need to be an R.
We have
that's right. You don't do that. You have open primaries. We don't. We have closed primaries.
Yeah. So you can do anything you like.
I go back and forth. Because, ladies
you sure
and
that's
gentlemen,
something you want to share with everybody? I don't know.
All my dear friends, both parties are so messed up, I can hardly stand it.
Okay. We're talking politics again. Okay.
We're talking politics. Sure. I'm telling you, you're all a mess. All a mess. And do you invest? I am the only one apparently who's not.
Pardon me? Invest in things like called the Defiance MAGA or the MAGA ETFs?
These
sort of portfolios?
MAGA ETFs?
Yeah. There's one MAGA. It's from Point
Well, that
Bridge.
would be a MAGA ETF if its symbol is MAGA.
150 stocks from the S&P 500, weighting them equally, been around since 2017. And just as you would expect, right? Because President Trump, MAGA has trailed the S&P 500 by an average of 3 points annually. I was saying that in joking, right? Isn't he back in office again? And the Defiance MAGA 70, these things, these are so trendy. It's so silly. It's
pandering, dude.
It's totally.
It's obviously
and I love
pandering.
these guys.
And the expense ratios. I mean, on the symbol MAGA is 0.72.
Yeah, we hate to break the news to you, but you can get a really good exchange traded fund now for 0.13 or less than that. Yeah, but I'm talking, factors a little bit. But I love what the manager of MAGA's portfolio manager says. Firms that donate to Republicans have a more free market viewpoint and are more focused on their shareholders. Whatever that means.
Yeah, exactly. I don't know what that means.
Exactly.
Then the number one holding in MAGA, which is the Point Bridge America First Fund. Yeah. The number one holding, I did not know that this was a big MAGA firm. Taco Bell, Yum Brands, Kentucky Fried Chicken.
Huge. Yeah, absolutely. Kentucky Fried Chicken. That's America.
Of course, that's it. 855-935-TALK is our phone number. That's 855-935-8255. So should you invest politically? Find out after this.
Tom and Don are talking real money.
My dad works in B2B marketing. He came by my school for career day and said he was a big ROAS man. Then he told everyone how much he loved calculating his return on ad spend. My friends still laugh at me to this day.
Not everyone gets B2B, but with LinkedIn, you'll be able to reach people who do. Get a $100 credit on your next ad campaign. Go to linkedin.com/results to claim your credit. That's linkedin.com/results. Terms and conditions apply. LinkedIn, the place to be, to be.
Your guides to a really great financial future. Tom and Don are talking real money.
Good boy. Good boy. Good boy. Give yourself a treat now. Give yourself a treat. Good boy.
Thank you. I've been waiting.
You waited so patiently during that break. You didn't bark or anything.
These aren't bad. I don't know why I'm doing the other food, actually.
Hey, it's freeze-dried meat or something. What is that?
Or something. That's something, the key part.
Something meaty. Hi, everybody. Welcome back to the Talking Real Money program, the radio show on Saturdays in Seattle on Northwest News Radio, and then the podcast on weekdays. And you can call us on Saturdays, noon to 2 Pacific time, at 855-935-TALK. And we're live almost every Saturday. I think, in 2024, did we take one Saturday off? I don't
even remember, but not very many over the last decade plus. I'll put it that way. So
devoted to you and trying to help you understand money. And one of the ways we do that is to pay attention to what other people are promulgating, particularly in the media. And one of our favorites is Jason Zweig. He recently wrote a great article about investing politically. And he goes on and on, as we do, about the fact that if you know it, the market already knows it.
It's priced in, as they say, baked into the cake, right? I mean, this is not stuff that you woke up one day and went, wait a second, I can do that.
Wait, Trump was going to impose tariffs? Why didn't anyone tell us?
Yeah. And by the way, stock prices, he also points out, are not driven exclusively by presidential policy. Inflation, interest rates, commodity prices, value of the dollar, wars, natural disasters, changes in other nations' policies. Those are among other factors that can push prices up or down.
As a matter of fact, Tom, Dimensional has done some great presentations that we've actually made available to the public about the fact that presidential elections basically have had no impact.
None
on
whatsoever.
Stock prices.
Yeah. None whatsoever.
It's not a Republican or a Democrat thing. They do what they do, and you're not gonna outguess them. Go ahead.
Yeah, and he makes a great point too, that people that feel like, well, I invest with my politics, you're not starving bad companies of capital or showering good ones with surplus money. They've already sold their shares to the public. That money's already been collected. There's a trade between one party and another. So
that is a really good point that we don't make very often, and we probably should. When you buy a currently publicly traded stock, you are not giving money to that company. You are giving money to someone who bought the stock from 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 the company.
And by the way, in today's world, most of those are institutions that are selling. Those are huge funds of some kind that are buying and selling. So these are all really good points. And the stock market literally does not care how you vote. But I have a couple more, because to me, if you're investing this way, you're allowing your emotions to play an even larger role in your money. You don't want your emotions to be involved in your money. Number two, if you're investing this way, these are trendy. These are ideas. You do not want to be investing in ideas, because there will be a new idea next week. And I'm just going to reiterate what he just said. If you think this is a great idea, or the people that at Point Bridge America think it's a great idea, that's already baked into the cake. Those ideas have already been traded on, so it's too late to the party to do that.
Now, the reality is that these kind of investments, they may get press, they may get talked about, but kind of like our good friend crypto, there's not a lot of money in them. For example, this Point Bridge America First ETF, or MAGA, do you know how much it has in assets, Tom? Did they say that?
I hadn't even looked it up, no.
What would you guess? Just ballparkish in the.
Let's see, because it's been around,
it's been around
3 years?
Like 6? No, 6.
Oh, yeah, pardon me, 2017. Yeah, so almost 8 years. I will say.
And think about it, what it is. It's an MAGA fund. Yeah.
Yeah. I'll say 15 billion.
Really? Are you going that high?
That is a lot, actually. I'm shooting way high there.
You were shooting way high.
Yeah, sorry. How much?
30 million.
That's
it's
just insignificant in today's world.
It's
sorry,
nothing.
Feels like a lot, but no, it's not. So,
again, much ado. Nothing.
And our
Thank
friend,
you, Shakespeare.
Yeah, our friends at Avantis, I just talked to them yesterday, and they have 63 billion. So, and they've only been around for a few years too. So, there you go. Shows you.
Yeah, I mean, our firm, Appella, manages what? 4 billion.
Almost 5, actually.
Almost 5 billion. Okay. Yeah, so that kind of puts things in perspective for you.
True.
So it's much ado about nothing. But the reality is, what I want to come back to, though, through all of this, is no matter how you feel, whether it's good or bad about the current political situation, it doesn't matter. How you feel is meaningless, and it's a terrible way to invest. What you know is meaningless because you cannot know more than the rest of the world knows. It is just not possible. If you know it, everybody knows it. So quit trying to invest based on your feelings, your hunches, or your perceived superiority in your ability to think these things out. You're not better than the rest of the market. You're never going to be.
And when the only way you would know more than others would be, it's called being on the inside, and trading on that would be against the law. So don't do that either.
Not like people haven't done that, Martha.
Well, no, they're still doing it, I'm sure. But
Martha,
my recommendation is not to.
Stephen A. Cohen.
He only runs a family office now, so he's.
I know, because he was being a bad boy.
Well, yeah, but the family office is like 10 billion or something, maybe bigger. It's
his family's pretty wealthy thanks to his.
Made a lot of money. Yeah,
thanks to his cheating.
Love his show,
and I just love it. You could call people. You literally know they have admitted to being cheaters and liars, and yet they're still working in this industry, managing people's money somewhere. It bothers me.
Yeah, I think so.
It bothers me. It's appalling. Our phone number is 855-935-TALK, 855-935-8255. Let's go to Oregon. Scott, welcome to Talking Real Money.
Hey, how are you guys doing?
Good, thanks. Thanks for calling. What's up?
Can you hear me?
Yep.
Yes.
Good. Hey, real quick question. 2 things. First off, I just want you guys to know I listen to your podcast all the time. And I do so with the speed set at 1.5 times the normal.
Come on!
How can you listen to me?
Yeah, I'm sorry. It's hilarious, but now that I'm listening to you guys in the normal speed, real time, I'm having a real hard time. So I just
you want us to go really fast, then we can go as fast as we can.
I thought we talked fast as it was.
Well, see, the thing about that is Don's voice would sound good at 1.5. I'm going to sound like one of the chipmunks or something at 1.5, and it's going to be horrible. It's awful.
You both sound great. Hey, the reason I'm calling is traditionally my wife and I make Roth contributions every year. This coming year, we anticipate that our adjusted gross income is going to be above the threshold for us to make a direct contribution to our Roth. So I'd like to make a backdoor Roth contribution. Currently, neither of us have a traditional IRA in place. So if I understand it correctly, if I make a non-deductible contribution to a traditional IRA and then immediately convert that to a Roth, that would constitute a backdoor Roth. My question is, I also have a 401k at a former employer that I was planning on rolling over to a IRA this year. If I was to do the backdoor Roth contribution first and then that conversion to the Roth, could I then contribute and do the rollover to the traditional IRA and be able to do both of those in the same year?
Because we're running up against a break, we're going to hold the answer until after it, which will be really short. We're going to be back in just no time at all. Stick around.
Tom and Don are talking real money.
Still getting around to that fix on your car? You got this. On eBay, you'll find millions of parts, guaranteed to fit. Doesn't matter if it's a major engine repair or your first time swapping your windshield wipers. eBay has that part you need, ready to click perfectly into place. For changes big and small. Loud or quiet. Find all the parts you need at prices you'll love. Guaranteed to fit every time. But you already know that. eBay. Things, people, love. Eligible items only. Exclusions apply.
For your real life and real future, Tom and Don are talking real money.
Well, because Scott is forced to listen to us at regular speed, I'm going to talk a lot faster than I would normally talk so that he is listening to us at what he perceives to be normal speed because we don't want to mess him up. Scott is asking us if he makes a backdoor Roth contribution this year and then moves his money from his 401k into an IRA also this year, does he have to prorate some of that IRA contribution and pay taxes on it, Tom?
That's, I just had to read up on this in the internet and had to read really fast because we're running out of time here. So I tried to speed it up as much as I could. No, okay, sorry. That's a really good question. I don't know if I've ever heard that before. I'm reading online here. So before you say we believe, go ahead.
My understanding is that if it happens in the same year,
you're screwed.
Yes. Yeah.
I'm reading a website here now. I don't know that for sure, but
the year.
I'm reading it on a website. It says there's no way you can do a backdoor Roth and an IRA rollover in the same tax year without mixing non-deductible and traditional.
Yeah, it's going to be a mess. Don't do it.
Okay. I couldn't find that. Sorry. Yeah, I thought if I was able to do one first and then do the other one second, that since they were two separate transactions, but
because remember, the key is to remember that with the IRS, everything is this. It's the tax year in which it happens.
What do you have a new employer plan?
Okay.
Are you enrolled in a new employer plan? You have the old orphan 401k. You said, correct?
I'm not.
Oh, okay. Because I was going to say you could roll it into that
401k, and it's sitting there by itself that needed to be rolled. But yes, I understand completely. So yeah, I figured as much. I guess the best thing for me to do would probably be to go ahead and do the backdoor Roth and then roll over the amount from the former plan next tax year when I expect my income.
Well, you could do some of it.
Oh, well, no, he expects his income to be lower next tax year so he can do a regular Roth. So I would just wait the year. Yeah, I would just wait the year. I mean, it's 9 months now.
Okay. Yeah, that makes sense. Okay, cool. All right, thanks, guys. I'll put you back on 1.5 speed on the podcast, and we'll go from there.
All right, and we'll go back to talking to the rest of our audience at normal speed because apparently you hear at dog speeds. Do you know that dogs see and hear things faster than we do?
My dog doesn't. He looks at me like,
no, not your
what
dog.
Did you just say?
Your dog's
lovable,
like, I'm looking for a tree.
Yeah. Anything I can
Master God person, do you have a tree?
That's all he cares about.
And now he's outside the door going, is he eating my treats?
I'm eating your treats, dude. You're in trouble. Great question, Scott. That's the first time I've ever heard that one.
Our audience will they're going to throw whatever they can throw at us, and it's usually pretty good. 855-935-TALK is our phone number. That's 855-935-8255. It's easy, it's free, it's and maybe I'm working on something. Did I tell you this? I didn't tell you this.
No.
I'm trying something new because we discovered the other day when we were joking around about the Talking Real Money YouTube channel with its whopping 1,660 subscribers.
And by the way, my stuff at Retire Meet YouTube is still running ahead of yours, just so we
287 to 247.
Oh, you're closing. No, that's closing speed there. Okay, look out.
I've been calling people. Well, we discovered that our friends at Stacking Benjamins have their audio podcasts on YouTube.
I was wondering what you sent me. I didn't know what that was.
Apparently, a lot of people do that. That apparently, from what I read, the most popular podcast platform for listening is YouTube.
Really?
Yeah. So I thought, well, we're making a big mistake that we're not up there. So I have just today, I put up a last Friday's episode. I'm putting it up in the next few hours as an audio
the Q&A
episode.
that we did?
Yeah, the Q&A we did on Friday. Yeah. Putting that up as a podcast just to kind of see. And it's so funny. When I was doing that, I went back and I looked through 2 to 3 years ago we decided to try video podcasts because everybody said you got to do
like
video.
4 to 5, but okay, it's been a while.
No, I'm looking. It says 3 years ago.
Okay, that was right after the merger, but okay.
Yeah, it's 3. Yeah, 2.5 to 3.5, 4, somewhere around there. Anyway,
yeah, I
was looking at them, and even though no one watched them, I mean, one of them has 67 views. 67. They're pretty good. We put a lot of work into those. I mean, there's a lot going on. You guys should be watching those videos. They're pretty good. 855-935-TALK. Give us a call.
Tom and Don are talking real money.
Are your ulcerative colitis symptoms proving difficult to manage? Tremfya guselkumab can help you manage the cycle of UC symptoms. At 1 year, many patients taking Tremfya achieved clinical remission, and some patients also achieved endoscopic remission. Individual results may vary. Tremfya is a prescription medicine used to treat adults with moderately to severely active ulcerative colitis. Serious allergic reactions and increased risk of infections may occur. Before treatment, your doctor should check you for infections and TB. Tell your doctor if you have an infection, flu-like symptoms, or if you need a vaccine. Ask your doctor if Tremfya can help you manage the cycle of UC symptoms. Call 1-800-526-7736 to learn more, or visit tremfyaradio.com.
Reality radio for a really great future. We're talking real money.
During the break there, I checked our first Talking Real Money video and audio podcast was published May 5th, 2021. So it's not yet 4 years. It's getting close.
Yeah.
And it was a combination, Talking Real Money and Sound Investing.
Really? So we had the great Paul Merriman on board.
And that episode got us banned from YouTube.
For...
They didn't tell us. We had to fight to get reinstated. Apparently, though, the whole episode was about crypto, and apparently it was a crypto person who complained about us and got us shut down, saying we were inciting violence.
Okay, we've been accused of a lot of things. That would not generally be one of them.
Yeah, in fact, we even had a note there that said, some guy said, I listened to this podcast to see where you incited violence, and I couldn't find it.
Wow.
Crypto. We make crypto people mad.
Apparently.
Well,
really
I do. You just kind of, it's funny how you do it. You sort of skate along the periphery.
Like the rest of my life.
You don't come right out and just
barely getting in there.
Yeah, you really don't. You don't. Anyway, I wanted to talk about one thing. I told you I was going to talk about
one.
This.
Okay, yeah.
Well, this one and then another one after it. We often talk about the stupidity, and we believe it's really, truly long-term stupidity of investing in individual stocks. It's too risky, and it doesn't get you the diversification you need to, in essence, take out the total risk loss from investing in stocks. We can't say there is no risk, total risk, loss risk from investing in stocks, but it's the whole global economy that has to fail if you have a globally diversified portfolio. However, great ideas can fall by the wayside. And 100 years ago, for over 100 years in the United States, there's a company that had steadily grown like a weed. I mean, to the point where if you drive down any major street in almost any major city, any town in America, you will see somewhere on a corner one of their stores. They're everywhere. So if you're thinking, man, this company must be doing really, really well, think again. They zigged when others zagged, or they zagged when others zigged, and it didn't work out for them. And the company I'm talking about is ubiquitous in America. It's called Walgreens.
Yeah, they've been around 100 years. I didn't realize they've been that long. Oh.
Walgreens, over 100 years. Walgreens had a market capitalization after their merger with Boots, which is a big British drug company, Boots and Alliance. They had a market cap in 2015. That's just 10 years ago.
It is.
Of $100 billion. Since then, they have lost 90% of their value, or $90 billion. They're going public, or they're going private now. They're being taken private by a private equity firm, at $10 billion. The shareholders are getting $10 billion for their stock.
And so drugs are just out now? People don't use them anymore?
No, it's creative destruction. And this is what you cannot account for when you own individual stocks. No, we're still going to get our drugs at a pharmacy. But the thing is when Walgreens was in its heyday, did you go into your grocery store and get your prescription filled? Did you go to Costco or Walmart?
Costco. For a long time. Now my stuff's all mailed to me. So
I was just going to say, and now Amazon, Mark Cuban's company, they just mail them to you. You don't have to go anywhere.
That's right.
The world changed, and CVS said, well, we better change with it. So we're going to get into the
mailing
prescription.
Mail order?
No, not the mail-in. The benefits, the pharmaceutical benefits management.
Okay. Yep. Mm-hmm.
We're going to get into that part of it. We're going to put doctors in our stores so that people who need a vaccine or a checkup can just come into CVS and get that. Walgreens messed up, and the problem is you don't know they are messing up until well after the mess has already taken its toll. Another great example from decades ago in retail is Sears. They let the rest of the world overtake them, and they were taken private, but the shareholders really got nothing out of the deal, and the company eventually completely vanished. This could also happen to Walgreens. 855-935-TALK is our phone number, 855-935-8255. Do not buy individual stocks, and do call us.
Tom and Don are talking real money.
Ready for your next adventure? KLM Royal Dutch Airlines brings you Real Deal Days, your chance to uncover real adventures and create real memories. Taste the real Amsterdam, explore the real Barcelona, and discover the real Johannesburg, along with many more destinations around the world. Secure your real deal today and seize the moment with KLM Royal Dutch Airlines. Restrictions apply. See terms and conditions at klm.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Look at that. It actually posted.
What's that?
To YouTube. The Friday episode. It's up there.
Yeah, but let's just finish the thought you just had a moment ago, because it's still fascinating to me that many people, it's owning one stock or a lot of stocks. Remember, that's one of the 3 financial literacy questions that people fail. Which is less risky? Oh, I'd rather have it all on Amazon because Amazon's a great company. I get all these deliveries from them. That Jeff Bezos got a great haircut. Really like his girlfriend. And those last 2 are go. But I mean, the thing is, people still believe this. They do truly, because they feel like they know that firm rather than investing in all these companies I have no idea about. And it's shocking to me. So that's one of the 3.
But again,
financial literacy
it goes
questions.
back to that thing we talked about a little earlier with the Jason Zweig piece, and that is we think we know more than we can possibly know.
Good point.
I shop there, so it's going to be fine. Yeah. Well, Walgreens didn't work out that way, at least for shareholders. It is fascinating. 855-935-TALK is our phone number, 855-935-8255. Let's go to West Palm Beach, Florida. And James, it's your turn. Welcome to Talking Real Money.
Hey, guys. How you doing?
Good. Thanks for calling.
I wanted to talk to you a little bit about Fidelity, because you had some less than happy comments about them this week, and I've been with both Fidelity and Schwab. But before I get to that, I just wanted to make a comment. I've been listening to you guys for a few years, and I've seen your pictures, and based on the way you sound on the radio, I had initially thought that Tom was the person in the brown sport coat with the wrinkled plaid shirt, and Don was the guy in the business suit with the perfect hair. And then I saw your video at Retire Meet.
And you went, oh, God, that's exactly the opposite.
It's exactly the opposite. It's like now I have to, rethink my whole perception of the show. But anyway, I totally like you guys.
That is funny.
Right now it's shorts and a T-shirt for me. Oh, well, wait, You're pretty ratty today too. Mr. Suit
I'm
guy.
out in the yard. Yeah, I know. So, yeah, that's good. I like that.
That's
Thank
funny.
you.
All
right, let's talk about Fidelity.
All right. I was a customer at Charles Schwab for about 25 years, and I invested with them. I generally bought a small number of index funds, and everything was great. But as I wanted to get more complicated, I found it was a lot harder to do at Schwab. Fidelity had a lot of great tools for doing that. And I'll agree with you. Sometimes their funds are really good and sometimes their funds aren't really good. But I generally don't care because I just buy whatever ETFs make the most sense. And so currently in my portfolio, I'm kind of modeling the Paul Merriman's buy and hold with a couple of bond ETFs on top of it. So I got 12 ETFs to manage. And Fidelity has some really great tools to do that. And so if you're trying to build a more complex portfolio, Fidelity, with the Fidelity baskets that automatically rebalances and purchases it, with the ability to buy ETFs in dollars, not just in shares, makes things a lot easier for the do-it-yourself investor who's going a little bit more complicated than two or three funds.
Those are very good features. Those are very good features. And by the way, when we are negative about things, we're not negative about the whole company. There are just some things that Fidelity does that bother us, so we'll mention them. Things that Vanguard does that bother us. Things that Schwab does that bother us. Nobody out there is perfect, but when it comes to, and I think we're confusing the different types of negativity. Fidelity as a brokerage platform is great. Fidelity's own investment products, their funds and the like, less exciting.
Yeah, and I will add to that. Our experience is with Charles Schwab and Fidelity and Vanguard and others as an institutional money manager. In other words, we use them for our clients' custodian. Schwab has built out that business better, frankly, even today than anyone else I know. We have our own service team. We can get things taken care of very, very quickly.
That's
I've worked with Fidelity
as a company. Yeah.
Correct. It's a different structure than what you have, as you put it, as a do-it-yourself investor. We don't operate with them that way. So, yeah, Don's right. It's not an all or nothing thing. And I like what you said, by the way, around the fact that you can buy anything you like at that platform, which is what you want to be able to do, right? Because you want to buy sort of, I think Paul calls it best of class or something, ETF. So that's important as well.
Yeah, and that's the part of Fidelity that's the part we think very highly of, is the ability to do some of that for do-it-yourselfers. They have some great stuff. But I would not suggest, again, we have to speak very broadly. We have to paint with a very broad brush. And when we speak broadly, we say, well, we like, I'd rather say I like Vanguard funds and ETFs than Fidelity's, just generally speaking, because Fidelity throws all kinds of pricey curveballs at you and gimmicky
and they're
products.
Coming from, they're back to the roots. Their roots are actively managed funds. Really, if you look at it broadly, Vanguard's roots really are index. That's really what they're known for. That's where they come from.
Index and it's also not a not-for-profit basically company.
Correct. So it's a different. So again, when we speak of it in that manner, we'd rather have you go to Vanguard. We'd rather have you use those index funds. But for what you're saying, sure, it makes sense.
Absolutely.
Yeah, I have ETFs from about 4 different families, including Vanguard, Avantis, iShares. And actually, even some of the Fidelity funds, not all of their funds, but they do have some good funds. They even have some zero-cost index funds, like 0.0%.
Yes.
And then they have some low-cost multi-asset funds if you just want to buy one fund and it's got bonds.
Do you remember the word I used, though, the word gimmicky? Those zero funds are a big, fat gimmick. And that I dislike. I think they're misleading because they're not the index. They're an emulation of an index.
Okay. Yeah, I think I can sort of see how they would probably wind up doing that.
To keep their costs down.
But
yeah. They don't have to pay anybody for the index that way, whereas VOO, for example, has to pay Standard & Poor's.
Plus, if they don't have to own all the stocks in the index, you don't have to trade
they can
those
do it
stocks.
the way they like. So, sure.
Anyway, but thank you for the comments, James, and thank you for listening. We appreciate it.
And thank you for finally recognizing that I'm the younger, handsome guy. I really appreciate that.
He is the younger guy.
I saw Don. I saw Tom's voice coming out of Tom's body, and vice versa. And I just couldn't square it. Couldn't square it in my head. So
how I'm trying to understand.
Well, thanks a lot, guys.
Thank you, sir.
Aren't I the freer, weirder spirit than Tom? I don't get this.
I see. So when you look at the pictures, that's true. Yeah,
you're far more buttoned down.
Definitely. Yeah.
Or buttoned up. Or buttoned up, somewhere.
Buttoned down,
Buttonholed or pigeonholed.
Buttonholed. I like that. Yeah. Okay. So anyway, thank you, James, for finally figuring that out.
Thing.
I can't wait to share that with my wife tonight. She'll think that's really funny. So,
but maybe it's because I know you. I don't know you from an audio perspective, and it is true. When you listen to people on the radio and you don't see their pictures,
you paint your own.
You paint a picture,
yeah,
and I know what he's looking, because there's the picture we have of the two of us, me in the brown coat.
Yeah,
and,
exactly.
Oh, yeah.
And by the way,
notice,
if you're trying
in
to
that
paint
picture,
one,
Tom's hair is much grayer than mine.
Yeah, but it's perfect. And if you're trying to paint a picture, you can just do what my grandson did last week.
And color?
We went to the movies, and he said, Grandpa, when you get older, you're going to look like Harrison Ford. And I said, anything you want, you let me know. I'm all about that.
So small, so we can be delusional like small children.
Whatever it takes, man.
Hey, do you have a short question we can do after the break?
Please.
Find one. 855-935-TALK if you want to call.
Tom and Don are talking real money.
You may get a little excited when you shop at Burlington. Burlington saves you up to 60% off other retailers' prices every day. Will it be the low prices or the great brands? You'll love the deals. You'll love Burlington. I told you so.
For your real life and real future, Tom and Don are talking real money.
Trending weirder, freer, Don McDonald over there. Normal, button down, buttoned up, Tom over here. There you go.
We got 4 views or 4 listens on our YouTube podcast already.
Okay.
4.
Do you want a question before we go to the top of the hour?
Yeah.
All right. Comes from Ken in Seville, Ohio. I own the American Century 2025 Zero Coupon Fund, BTTRX, fund similar to a target date fund. The majority of its top 10 holdings are due in 2025. My question, will American Century just close the fund at the end of 2025 and give me cash, or will they continue operation past 2025? If they keep the fund going after 2025, does it pay to stay in it? This is BTTRX.
BTTRX, what did he say it was?
The American Century 2025 Zero Coupon Fund. That doesn't sound like BTTRX, though.
Yeah, it is. Okay, I wanted to make sure I had the right one.
Yep.
So
he wants to know, are they going to hand him all the money at the end of this year when those securities expire or mature, pardon me?
I don't know.
I don't think I've ever heard of that, but
I don't know, but I'm looking at it, and all of the securities mature in 2025. The entire portfolio matures in 2025.
But wouldn't they latter part of this year just buy a new short-term zero coupon?
Every single zero coupon bond in that portfolio matures. Oh, I take that back. One matures in 2026.
So they're going to move it all into that one then?
My guess, okay, here's what I'm seeing. I'm seeing a couple of 26s sneak in as I go further down the list. So my guess is that this is what it looks like, is that they're going year to year.
That's okay. That's
what it looks like.
Yeah. Okay.
So as they're maturing, they're just going out 1 year.
Yeah. They won't close the fund.
Yeah, they're not going to close the fund. But that's a weird fund. I've never looked at that fund before. And its expense ratio, this is a bond fund.
Yeah.
Bond fund. Expense ratio, 0.55.
Spendy.
For a bond fund.
And what's it paying? I mean, well, zero coupon, so there you go.
Well, but it is, it has income. So it must be just, I don't know how this fund works. I have no clue. I'd be guessing. I'd have to do some more research because I've never looked at the fund, but it says the yield is 5% right now.
Wow. Okay. All right.
I don't know how a zero coupon, but I guess it's in distributions when they sell the bonds at a profit because rates have been falling.
Mm-hmm.
So that must be what they're doing, but I don't know. and it doesn't sound like a fund I would suggest or be in.
Yeah. All right. Couple announcements. First of all, if you'd like to meet with me in Arizona, I'm doing that. You can go online April 14th, send a note to talkingrealmoney.com, click on Meet an Advisor. Happy to see this for people in the podcast, but I'm taking calls now in the Seattle area too. So either way, happy to chat it up a little bit. Got a little more time here in the coming weeks.
You do? Okay, good.
No? Okay.
Yeah, no, I'm glad you do. I'm thrilled that you do. And remember, every Saturday you can call us here on the program at 855-935-TALK, 855-935-8255. You can also go to our website and ask questions there. Just like that one that came in just now that we did just now. That one was typed in on the contact form at talkingrealmoney.com. However, there's another way to do it that is a whole lot more fun for Don. And that is for you to speak your questions so I can answer them on the Friday podcast.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor. Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services. Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit talkingrealmoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.